If you are choosing a mutual fund in 2026 based on only last year's returns, you may be shooting yourselves in the legs. Even though some funds returned 50% in 2025, smart investors don't just chase hype. They consider other factors like risk tolerance, how long they are willing to stay invested, and their financial goals. So in this video, I will show you the best mutual funds to grow your money fast in 2026 based on your risk tolerance, time horizon, and financial goals. Ensure that you do not skip any part of this video so you will not miss out on any important details. My name is Funsho and I am a chartered accountant. I have over 14 years experience advising high net worth individuals and companies listed on the Nigerian exchange. If you are yet to subscribe to this channel, I invite you to subscribe now. Also, like the video and share it with someone you know who needs to see what we are discussing today. Please note that this video is for educational purposes only and it is not financial advice. As always, do your own research before making any financial decision. Now, let us get into the conversation for today. If you have been watching my videos for some time now, you already know that there are three major types of mutual funds in Nigeria. 1, we have the equity fund. 2, we have the balance funds. And 3, we have the money market funds. These are the major three types of funds we have in Nigeria. So we will start our discussion today with equity fund. If your goal is long-term growth, then equity fund should be the fund that should form the core of your portfolio because these funds invest primarily in listed equities on the Nigerian exchange. When you invest in equity mutual funds, instead of picking individual stocks on the stock exchange, which can be very risky, what you'll be investing in is a diversified portfolio of companies, all managed by professionals who monitor the market on a daily basis. Last year, equity-based mutual funds returned an average of 50.56%, almost matching the Nigerian stock market's 51.19% gains. Analysts highlight that this wasn't a coincidence. Sectors like banking and consumer goods experienced robust earnings growth, and companies with strong fundamentals benefited from macroeconomic recovery and improved investor sentiment. Equity funds capture that upside without having to pick or watch any stock. Now, a word of caution, equity funds can be very volatile. Returns can swing dramatically in short terms. That's why they are best for investors who can tolerate fluctuations and stay invested for at least 3 to 5 years. Now, I will show you my top picks for equity funds for 2026. Number 1 is Guaranteed Trust Equity Income Fund. This fund stood out last year with about 80% returns. It combines capital growth with dividend income. Analysts are of the view that in volatile markets, funds like this will stabilize your returns, even if stock prices plateau or stay stagnant. Number 2 is Rock's Magna Equity Fund. This fund returned roughly 64%. The fund is driven by high conviction stock selection and active sector rotation. Analysts like it because it's very flexible and it can quickly adjust to changing market conditions. And number 3 is Stanbic IBTC Nigerian Equity Fund. This fund delivered 62% in 2025. Stanbic Equity Fund is a large, diversified, and professionally managed fund, and several analysts say its disciplined approach makes it resilient and a good buy in 2026. So for growth-oriented investors, equity funds should be the most of your portfolio. But remember, structure matters, so choose funds with professional management. If you are getting value from this video, please like the video and share it with your friends. Also, remember to subscribe to the channel so you can see more videos like this in the future. My goal on this channel is to help serious investors like you to make smarter financial decisions going forward. Before we continue, I want to quickly invite you to follow my WhatsApp channel. If you are serious about investing smartly, especially as a Nigerian investor, this is where I'll be sharing practical tips you won't always see here on YouTube. It's free and everything is focused on helping you make smarter financial decisions. If that sounds like something you want, check the link in this video description and join the channel now. You can also find the link in this YouTube channel description. Next is balance funds. Think of balance funds as a compromise between growth and stability. They combine equities for upside and fixed income instruments for stability. In 2025, balance funds returned an average of 31%, not as high as equity funds, but still very strong. Analysts recommend this for investors who are growth-minded but cautious. After a strong equity upside, markets tend to be volatile. Balance funds smooth out those swings while still capturing upside. With inflation and the monetary policy rate expected to fall in 2026, balanced funds can gradually increase equity exposure without losing income stability. Now, I will show you my top picks for balanced funds for 2026. Number one is Zenith Balanced Strategy Fund. It delivered 55% in 2025. The fund is driven by strong equity positioning and disciplined risk management. Analysts says it is one of the most reliable balanced funds for 2026. Number two is Stanbic IBTC Balanced Fund. This fund returned 49% last year. It is a well-diversified mix of equities and fixed income instruments. Its scale and structure gives confidence to both conservative and moderate risk investors. Number three is Alpha Morgan Balanced Fund. The fund posted 42% gains last year. The fund is driven by active asset allocation and it allows quick adaptation to changing market conditions. For moderate risk investors, analysts often recommend allocating 30 to 50% of your portfolio to balanced funds. It's the layer that helps you to sleep well at night while still growing your money. If you are getting value from this video, please like the video and share it with your friends. Also, remember to subscribe to the channel so that you never miss my future videos like this. Finally, we have money market funds. This fund returned the lowest returns on investments. Now, I know the money market fund may not sound as exciting as the equity and balance funds, but they are the foundation of any well-structured portfolio. The fund is actually the largest and most stable segment of Nigeria's mutual fund industry, with a combined net assets of about 4.5 trillion naira. In 2025 alone, the money market fund recorded an average return of 18% across all fund managers. Analysts value money market fund because they guarantee capital preservation, predictable income, and easy access to cash for emergencies or other investments. Even with yields moderating slightly, money market funds still beat treasury bills and savings bonds on a risk-adjusted basis. Now, I will show you my top picks for money market funds for 2026. Number one is ICO Money Market Fund. This posted 18.4% returns. This fund is suitable for investors comfortable with modest manager concentration risk. Number two is ARM Money Market Fund, which returned 18.1% last year. This fund combines safety with slightly optimized yield. And number three is Stanbic IBTC Money Fund, which delivered 17% last year. Stanbic IBTC has the largest money market fund in Nigeria. So here's the reality. If your goal is growth and you are willing to take risk, then go for equity funds. If your goal is for safety and you want to be able to withdraw your money whenever you need it, then go for money market funds. But if you are in between, you want stability and a safe balance of growth and risk, go for balanced funds. The smartest approach isn't picking one category or hoping for the best. It's about layering your investments and maintaining a healthy mix of these funds. Equity fund for growth, balanced fund for stability, and money market fund for liquidity and safety. Remember, 2025 was a year of strong returns. 2026 will require thoughtful positioning and not chasing hype. Long-term wealth isn't built on reacting to last year's winners. It's built by structuring a portfolio that performs across different market conditions. Staying disciplined and let it compounding work for you. If this video helped you, please like the video and subscribe to the channel so you will never miss any of my future videos. Also, share the video with people who will need to see it, and I will see you in the next video. Watch the next video on the screen. Thank you.